Massive options transactions, huge new partnerships, and a potential change in sentiment. Hello, ladies and gentlemen, and welcome back to the Daily Show where we discuss stocks, commodities, and cryptos together. My name's Tom, and today we need to talk about how the hottest sector in the markets right now might be showing us some warning signs. We've also got key levels coming up for you for the FOMC event, the Bitcoin zones, and of course, the inflation trade we've been talking about for a while continues to heat up. This is going to be a massive show. Let's get into it. Well, welcome back everyone to the Daily Show. Today we're talking macro, lead indicators, and the hottest charts. Just a reminder, if you love markets like we do, remember to subscribe and smash that bell icon. We produce these daily to help educate traders and investors like yourself and all of us to improve in these markets. Let's begin by discussing what was moving the markets over the last 24 hours. It was Google and the deal that could be done with this company over here. But really, it was also about the fact that we rallied in the morning and then started to see a bit of a sell-off throughout the session. More on that coming up. And then there's Tesla, the new FSD. Supposedly it's pretty good. It rallied through the session and then it held it, which is the first time in a while it's managed to do that. Is this a change in sentiment? So let's talk rotation over the last couple of months. I think it'll come as no surprise that semiconductors and XLC have been some of the best performers over a 3-month rolling average. And this is something I like to do every so often, to take a look at a chart and to see what the new up-and-comers are. Now, recently we've been talking a lot about energy, and when you take a look at the last month, you'll see why. We've already been seeing it perform, and gold, energy, metals, minerals, these types of things have been doing better along with the defensive market segments. And if you were in mostly defensives and semis over the last 30 days, you would have done better than most people out there. What about the last 24 hours though? It was XLC, it was solar, and was kind of like an up and down all around the world in terms of what was doing well and poorly. However, there were a couple of stocks that were starting to underperform, which has people worried about further rotation and a decline in sentiment in the internals in the markets right now. Let's talk about path of the tech stocks in particular. Now, obviously, if you're making money this year, everybody loves you. It's not 2021 anymore where markets loved the underdogs, the people that were non-profitable. If you're not profitable in your tech, then you've been selling off recently. And this is a huge divergence between the current markets and conditions, and a lot of it has to do with higher for longer. Remember, this week is the FOMC event that's happening on Wednesday, and you're going to be needing to be very aware of the interest rates, in particular the US 2-year. And I suggest that one of the alerts you might want to have on your charts is going to be the 4.77% threshold. If it manages to break through that zone, it's going to be a big deal, I think, for all of us. Let's talk the most closely correlated markets right now with 2024. Obviously, it's been a massive rise with huge amounts of bulls. In general, if we're going to start having problems, this is kind of tends to be where we start to chop and move around a lot. And I expect it to be relatively choppy, as if we've seen all of these S&P levels, the 1960s, 1995, 2016, and even the 17 periods, when we have rallies like this is where we usually start to take a breather. Basically a move sideways to down for a few months and then huge rallies up. Now, it does make sense for it to do it, but we still need the price action methods. And of course, we're going to talk about that very soon when we go through the S&P 500. Let's talk what Wayne has said about post-OPEX weeks. He's gone through and he said, if we were rolling in positive, then generally we were looking at a negative style event in the post-OPEX. That's where we find ourselves right now. Only 5 were up and 18 were down. Considering the market is generally bullish, that's actually a pretty bad read when it comes to these markets. And I went to the polls and I asked all of us in the community, what do you think is happening right now in the markets? Now, to make it so it was a little bit more fair, I added neutral or I like pie. Now, I particularly like pies. They look different in Australia, I'll tell you that. But overall, bulls came in a little bit weaker than the bears, which were at 42%. And I'd say, considering we got almost 1,000 votes straight away, thank you very much if you did vote in this, that most people have a bearish tinge this week. It may be speed, the people in the channel here, but I'm seeing it in pretty much everything across the board. Let's now talk about what's going on with the S&P 500. Let's break it down together in terms of what happened during the day. Now, you'll notice I have a daily res up here. One of the previous closes over on this left-hand side was hit during the session, and this so happened to be also where we saw a call resistance. Now, we spoke about it in our Monday open show, and it was around that zone that we were a bit speculative of maybe the stocks are not going to hold up, which was a very aggressive gap up, thanks mostly to GTC for, of course, Nvidia, the news that everyone was speculating on, and then, of course, Google and Apple results. For now, the market remains in, of course, the upward trend line, which is making a series of higher highs and higher lows as it knocks off this 20 moving average. But let's break it down to a smaller time frame for a moment to have a look at what actually happened intraday. And I think this is where it gets interesting. It opened up, it rallied a little bit during the morning, which we know is often the hour of power. Well, the first hour is the hour of noobs, being mostly us and retail traders. And then it started to fade that, actually moving underneath where it did end up opening. Now, what this kind of leads you to believe is that the bears actually got a minor win today. And you might say, well, how did they get a minor win when the market was up? Well, because it couldn't hold being up. And it does suggest that we're still trapped within a zone. So which zones are the most important right now? Well, let's have a look at S&P 500 futures to get a bit of an understanding. We came in pretty exhausted in terms of futures market action. We traded off this zone and then we started to sell off. Really, for the bears, the 50-90 zone is the most important. This is a huge level that isn't just a trend line behind the markets. It's also around the daily 20 moving average, which we know has held up these markets the whole way through. And of course, it's a big sentiment shift there. Now, if it does manage to get underneath this zone, it's probably going to go towards 50-50. And if it gets underneath 50-50, then we've got to talk about some of the big levels there. But for bulls, you're going to be looking very healthily at this 5100 level, 5090 level, and saying, oh, I hope I can get a buy there. We'll find out which way it goes. For now, it seems like it's stuck ahead of the FOMC, and I kind of expect it to be stuck between that 5175 and maybe 5100 zone ahead of the event. So maybe we'll get a sell on Tuesday, but I don't expect it to be able to break out of that zone too easily. Let's now scroll back for a moment and think about where could we be going to next. Well, of course, we have a couple of major levels. First, we have the gap fill. Now, this gap fill was left over here, and it was, of course, rallied off in a mega way. That would be the first level that the bears would be looking at the markets to come back to. We talk about the weekly 20 moving average as well quite a lot. We've got an anchored VWAP sitting behind here as well. And I like this level of demand. So I think in the worst case, if we're still going to remain in a bullish market, which at least the data and the stats kind of suggest we are, then we're probably moving that the possibilities are all of these types of things. In general, they're drops into rallies. Now, there are some reasons why that is most common way of looking at it, but let's have a look here at the actual options. Where do we turn into more of a negative kind of bear in terms of just the options market? For now, we've been in positive gamma for so long that it seems like everything is just ripping. And that's because we actually haven't got to a level where dealers are having to hedge their positions in a negative way. 5100 remains one of these key zones that we need to be looking at. Obviously, 5000 has some puts on it, so that's a bit of a put wall. But in general, if we get through 5200, that will bring in further positive gamma, and you have to expect at that point for us to squeeze each and every 50 points. You can already see here the amount of calls that are sitting above this zone. So 5200, expansion past that will probably bring 5250, then 5300, then possibly even a 5400. So just remember, the bulls and the bears, this is an absolutely very important zone, and currently the structure of the market could go either way. It's currently going sideways, which is considered what we call a pullback in time. Now, that's also like a pullback because you're basically wasting time, which is the most important asset. But at this point, we're not sure which way it needs to break through. These are the key levels that you'll need to be watching. Let's also talk VIX for a moment. I thought we should bring this one up. We've talked about a little bit about 15 and 16. It looks like it's moved down to 15. So obviously between 15 and 16, if we manage to get through that zone on the VIX this week, I think it means the bears are starting to get back into control for now. So some levels to be watching on the VIX. Definitely start charting it. I know it seems dead, but I think it's moving forward. Just a quick reminder, if you want to follow us on some of the other socials, links in the description down below and pinned comment, including our newsletter, which you might want to sign up for. Let's now talk about tech fund flow. Of course, the bears are on this one. We're all salivating over the idea that maybe flows have started to decline. Flows have been very strong for most of 2023, and it's pretty clear that most fund managers are maxing right now. We'll bring that up in our next show as we talk about really the fact that fund managers in general are looking forward to some pretty decent gains in 2025 and 26, at least in their expectations. Here's another one that I thought was really amazing, and that is that central banking or central banks in general are hoarding gold. Take a look at this hoard. It's It's a massive hoard and a huge increase. Could this be the reason why we've seen gold moving up? I think hodling by central banks is certainly a good thing for the precious metal. And as I've talked about before, I have pretty big plans on it over the next couple of years. Although it's no Bitcoin, I think it could move it into, this is my personal opinion, it could move into around $3,000 an ounce. And if I'm seeing central banks hodling it, for now, that's a good sign. Now, what about rotation? Have we been actually seeing some underlying weakness? Well, some stocks have been moving below some of the moving averages. The 20 moving average, it's down. Over the 50 moving average, it's down. The 200 still remains relatively good. And what this is telling us is that the market for now is probably in a bit of a sideways action or even weakness. And this is because rotation has been occurring. Are we due it? Well, yeah, the answers are, of course, we are. Over 90 days plus now in terms of the last 5% correction on markets. And that's well over the average, which is 67. Could we expect some type of crash though? Well, statistics would say no, because we're only 90 plus days. We're not 290 days, which is the average between a 10% correction. Let's now talk massive transactions. There were a lot. And of course, people that have been following the dark pool activity on things like MSTR would probably be pretty happy as this thing started to fall off. Obviously, we saw a lot of transactions after that thing went booming. But here's one that really might surprise you. Tesla. Big transaction on that during the intraday, and you can see just after lunch they got excited about it last week, and then overall it's basically moved up pretty heavily. Now that probably is an insider saying, you know what, I like the base. They're making a bet on the fact that it's moved down. Everyone's gone negative on it, and that's generally a time where you might want to say, well, maybe I'm looking at dollar cost averages. The FSD is the main reason this is moving up for now, but I think that's just an excuse. Realistically, let's face it, it's at an oversold level. We'll talk more about that a little bit later on. And what about Qs? Qs get possibly a lot of distribution. It's hard to tell exactly what's happening here, but we do have one of those monster transactions just a little while ago at the tippity top. So because this huge transaction came through and we're seeing this type of disbursement of trades, if we do end up taking a new low on the NASDAQ stocks, which we haven't yet, I think it's very considerable because we've seen these previously be buys, and at the moment it's trading kind of like here. If that drops below, yeah, I think it's something we need to be paying a lot of attention to. Again, it would be kind of that clincher that shows that maybe the bears are kind of going for that correction, which is in some ways overdue. What about CTA modeling? We've got the updates for you. Here are the CTA models, and you can see here that the NASDAQ has obviously dropped off a little bit in recent weeks, making a series of lower highs in terms of overall CTAs. They're not as bullish as they were. They have been dropping positions, and that probably is shown by those outflows into tech. Now we can see here the S&P 500 is a little bit different, actually made a higher high, but then dropped back over the last couple of trading sessions. So CTAs still remain pretty heavily leveraged and pretty heavily moving towards the top side, but they are starting to reduce, particularly in tech, which is where those semiconductor stocks are starting to weaken off. For the week ahead, what do you need to be paying most attention to? Well, look, the Bank of Japan press conference, that's probably considered to already, include an overall rate hike. That's pretty much the main thing. We can see here that FOMC is the main one, and people will be looking specifically at the dot plot. Basically, Goldman Sachs and many other members that have been sending out notes this week have been talking about the dot plot. They've been talking about the amount of rate cuts, and obviously this is the discussion. I think the key here is going to be looking at price action more than anything else, but we do also have Fed Chair Powell coming out, and that's on Friday as well. Just remember the press conference, one way can be pushed, then an opposite way can be pushed when the press conference comes out, as the market loves to hang on every word from Powell. A lot of you have been asking about Nat Gas. I don't want to talk about too much because obviously you know my thoughts and opinions on Nat Gas trade. You can find the market, you can find even the right direction, but it is costly to trade this particular pair. The good news for Nat Gas traders, CTA's made a new high, showing that maybe it has formed at least a temporary base. They don't call it the Widowmaker for no reason though. Let's now take a look at options. And of course, Nvidia had a massive one-leg option on it, but it was actually down on the day. The big ones were MSTR, probably sucking in a whole bunch of retail traders to destroy them, down 15.7% after those big reads. And then SMCI, which obviously is a stock we've talked about to go sideways to potentially down moving forward. And that one also suffered 6.4%. Options was very low on the session, and that's because we're going to heat up most likely into the FOMC. That's going to be a big one with only 35 versus 42 almost now and 57% calls. Retail traders made up 31% though, so it was actually a more heavily traded retail day than maybe the street day. What do you think about that, guys? Let us know in the comments down below your prediction this week or the favorite instrument that you're trading. Let's now take a look at what's often considered a weakness in the markets. When the Dow Jones Transportation Average is weakening while the markets are hovering or even going up. It's not a new phenomenon. We've seen it before, but it started to accelerate over the last 4 days. I don't really like what I'm seeing here. Dow Jones Transportation Average is about to potentially take a new low. Obviously, we've found demand here before, but if we take this low, we're probably moving down to here. And again, it's just kind of showing you some weakness in some of the internals. What about the bonds market? Generally, I think the bonds market predicts pretty decent pullbacks. If a pullback's going to be really brutal and bad, the bonds market should be telling us. According to this read over here, we are not seeing that. We've basically come back down to the calm before the storm of previous periods, but we haven't seen this uptick. If it does uptick though, I'll be the first to update all of us together. So we'll be looking at that. In terms of bond options volatility, that has moved off. We first bought the move in the other day while we were talking about it. And you can see here that the move has bounced several times off this key level. So that's kind of showing you that options volatility expectations are increasing ahead of the FOMC, but we haven't seen that fear coming into the actual price action. It's just behind closed doors for now. DBC, the commodities index, is improving. This obviously is the inflation-based trade starting to come through. And we could see here that it's kind of formed a nice base. And again, it actually took a low that was underneath all the previous supports. So previous resistance back here in 21, nice base, big breakout last week. Nothing new to anybody who's been viewing the channel for a while. We've been talking about this for a while because, of course, we've seen this inflation trade in copper, in energy, and other markets. Let's now talk copper. And the breakout continues. At least it's holding up. First TP has been hit. Second level, probably somewhere around this 425 zone. And if copper keeps flying, it really just tells you that price action saying, yeah, there's inflation in the back end. And suddenly that will become the storyline in the news moving forward. It's already started to creep in there. But if the market sells, you watch how many newspapers, economics articles, and all these types of things will be talking about it. They'll be getting absolutely wild if that does happen. Let's now look at some long-short ratios types trades. I like looking at these just to see relative strength. We first brought this one up the other day, which was Apple had been oversold in our belief versus the Qs. Well, so far so good. It's actually held up pretty well, and you can see here the previous support levels and the fact that Apple is still holding that base. It was one of their better returners over the last 24 hours as well. One market, though, that is looking weak, and I think this is probably the second or first most important chart right now, has to be semiconductors versus SPY. So you can see here that the semiconductors has been weakening. I don't like the weekly. It kind of looks really bad when you see rejections like this. And although I think it is the best sector in the market, I think it's going to more than double over the next decade of course. It's going to do very, very well. It is due for a pullback in time, at least a sideways in kind of market. And that's because when you look at it, it does this all the time. It goes on epic runs, gets a little bit frothy, takes a little bit of a breather, takes a little bit of a breather, then froths back up. And it doesn't look great on the charts. But what do you think? Do you like that? I'm not super won over by it. US 2-year, something you should be looking at. Set alert for 4.77. We're back at these highs again. We know that if we spike above this level, it could be the straw that breaks kind of the market. Probably the most important chart, I think, this week to be watching. So US 2-year on the watch. If it breaks to a new low, bulls, you can just celebrate all day, most likely, at least until the actual rate cut happens. Because as we know, and we'll bring this data up again, it's when the rate cut happens you actually need to be most terrified, especially the speed of it. Let's now talk Google for a second here. This is another ratio-based kind of assessment. And what we saw Google come off its base. That's pretty nice, but it's actually been underperforming versus the Qs for a little while now. A 0.4 ratio, obviously being more of a TP zone or a more plausible number. If people keep speculating on it, if it manages to win the data and get that AI kind of deal done with Apple, I think it could be a really big play here for Google. And I think that this is an interesting level for it because, of course, it's really under where it's been several times in the past versus the Qs. Again, is Google going to outperform the NASDAQ? It could be with those kinds of information that's just happened. It's a decent catalyst. Another catalyst we'll be looking for is IWF, IWD. We talked about it on our weekend video. It's basically growth versus value. At the moment, growth is outperforming, but that's been kind of changing in recent weeks with value being the bigger play. And that's really where we saw that tipping point where inflation stocks started improving, especially energy and utilities And of course, we also saw it in gold. Now let's talk dollar index. It's bouncing up, makes sense. Usually when the DXY, or at least in the past, when it had been bouncing up, that would take the stock market down. I'd say it's in kind of the middle of nowhere land at the moment, waiting for the FOMC. Not too many good reads on this. Euro obviously hit our resistance the other day, but DXY is struggling. Gold, still looking good, still looking overall bullish. Obviously, last week was a little bit down. Some people will be calling this little flag in the overall trend. Look, the trend is still up. So until that changes, it's really just buy the dip in terms of the overall philosophy on gold. And with central banks buying it, it's not too bad. Here's one I want to celebrate you guys, everyone in the community. Well done. If you were on the oil trade or you've been following the channel for even a couple of weeks, then you would know we've been rabbiting on about this. And I've been pretty persistent on oil, even though a lot of people haven't liked it. It's just because I think it was a pretty strong case. We had energy stocks breaking out. We obviously had Brent going early, and US oil just hit the first target of 82.50 plus. So it's now in kind of the danger zone. I expect it to kind of float around here into the FOMC. Maybe we go a little higher first, and then this is going to be an important point. If we're going to see some deflation, then we want to see oil break down here. At the moment, if oil breaks through the top up here, 84.50 plus, it's going to get, I think, a little bit rough on the markets moving forward. Let's now talk stocks. So Tesla, you guys would be happy. Possible return point, held during the weekend. FSD, whatever it was, beta, I haven't tried it. Overall gets an okay reception. Is that a catalyst? Well, I think it's a news catalyst. And of course, news is actually pretty important to Tesla because it does manage to get most retail traders like you and I a little bit excited about the stock. And funnily enough, retail traders are one of the biggest trades on Tesla. So you can see here, gap down, end up gapping up. It held a 6.25% up day. Now that's a fairly big deal. Let's put this in perspective on the weekly here. And although it's a little bit early to tell from a pure technical standpoint, this is certainly a zone where I could see dollar cost averages liking it. I didn't have this possible return point on the charts for no reason. It's been sitting there for months and it finally hit it and did see a bounce. Is this the positive catalyst though? Well, it's certainly a beginning. I think some people would like this with stops below the low, and it would be an interesting one. Another stock that kind of came off its base yesterday was one we talked about in the live stream, which was Adobe. It ended up being an absolute extraordinarily good trade for the session, basically doubling on the ratio. So really nice movement up here. I probably think it's a DCB, which is a dead cat bounce, but just shows you that when you go and you find opportunities, there's plenty of them in the markets, guys. Come from the abundance mindset we talk about on the channel all the time. It's really important and it gives you so much op. Meanwhile, everyone's looking at Nvidia, but guess what? It's not really doing much. Yeah, it rallied during the session, but guess what? It's sold off after that, only ending up 0.7. And this is all thanks to this giant candle over here. People are speculating on it. I still think Nvidia needs a pullback in time, which is a sideways to even down. I've reiterated it a few times here. I don't have great technical reads in between. It's just kind of like my opinion on the overall structure. And the same thing goes for SMCI, which a lot of you, a few people in the comments anyway, got some hate on this one. So I believe in the initial rally, same with Nvidia. Probably around here, I thought it would probably weaken a little bit. After hours, it was down further. So it's actually come back down to the level we were talking about. But this one here, SMCI, had some great catalysts, the S&P 500 inclusion. It's not to say that the stocks are bad. Nvidia, it's going to double. Now, when? I don't know exactly, but it needs to take a breather. You don't want something to accelerate like this. It just becomes an absolute collapse on you. And if you haven't gone through one of those before, even if you're hodling them, it can be pretty brutal when you see like a 60, 70% wipe off on your stock. So SMCI, taking a breather for now, obviously weakening here. The real sign of the weakness was over on this particular candle where we saw that rally up to 180. If you got a short in there, I guess congrats to you. Personally, I don't like to short the semiconductor market. It's quite hard. Are there other ops? Yeah, we bought up the stock of the week last week, which was PayPal, and it's still going. So it was up 2.2% on the session. Still favor PayPal here. I don't even know if the company is doing well or not, but the main thing is that we've got the inverted head and shoulders, the breach out, and of course the wicks and the defended zone. So I liked what we were seeing in terms of accumulation, and so far so good for that. What about HSI? Well, the Chinese stocks, some of the market in China is not doing so well. If you actually have a look at the overall tech companies though, which has been our main thing here, not bad. CQQQ, KWeb, still holding. And that's showing really what you would expect, which is that the rally is beginning in the tech stocks, the gamma style stocks. So yeah, China's still looking bullish for now. What about the US 2K and the other indices around the world? Well, the US 2K is weakening, 2000 being the bottom of this ascending channel that's happened so far. Some bulls will like the 2K level. I expect us to kind of sit there ahead of the FOMC. Probably no surprises. We'd be around that zone, a critical level for a critical piece of news. Qs, pretty similar. We've still got the same level here. A breach below 17,780 or 17,800 is most likely going to bring the bears with it. You can see here a bit of a rejection throughout the session as well. So let's take a look at a 5-minute chart together on the Qs, and let's have a look at what's been happening here. So first up, I just want to mention that we've really been seeing a series of lower highs and lower lows. Now, in the previous session, we did manage to get to a higher high over here. So for a bull, you're actually going to really like this zone. If you're somebody that just trades statistics and just look at it and you really believe in the bull side, this kind of pullback is going to be where you're looking for it. We don't have that trigger yet, but that's because it did manage to get through this area and make a higher high. Bulls are going to like this, similar on the S&P. Those are the key. It's kind of like a key minuscule level. But I think the most important thing here is that we end up selling throughout the day. So let's have a look at the Qs on the 5-minute so we can see what I mean. It rallied up, it rallied through. We know there's going to be stop losses there. We know this is going to be supply in general, and then it dumped. And it ended up going down underneath this level, which again shows you that the bears won the close. And this makes sense into the volatility that we're seeing right now. So the Qs, again, I'm just siding in the error of caution here. It was a really hot market, but you can clearly see the rotation going on. It's making a series of lower highs and lower lows, and we've got those critical levels to be looking at on the futures market as well. Let's move over to the crypto world. What's going on there? Well, it's pretty important the bears win this one, because we know Bitcoin's very strong. It's got the bulls in it. It's got very, very strong kind of bullish intentions. And I've had this same line here for a while. The supports becomes the resistance, becomes the supply, because we know that was supply after this point. And at the moment, the bears are in control of this market. If you're a bull above 70K, you're probably smiling. I think that's a pretty good level for the bulls to regain. And for now, I'm looking for ideally some weakness in Bitcoin. And the main reason is because everyone's so hyper about it. Remember, the ETF is a big deal long term, but that doesn't mean that all the money flowing into it is not just going to go, oh, see ya, a little bit until they get back in. Or maybe they're not going to like the volatility. You know, for now, it's a huge deal moving forward. But I think Bitcoin's at that res. It could be flagging, so that's also a possibility. I'm not going to trade it myself. Invest head and shoulders. I've seen all of these things on the internet. But yeah, 70K being a key level, I think, for the big bulls to get back into the market. If you enjoyed today's video, please remember to subscribe, smash that like button, guys, and of course, sign up for our weekly newsletter down below to get more information to help educate yourself about how these markets work together. Bye for now, and thank you so much.